TSN, Tyson Foods on the New York Stock Exchange. Look at that monthly candle chart. Look at that huge base. The base that launched this move. Look at that implied measure move. Reach your target. This is the greedy target, the biggest implied measure move. Reach that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So you've been in the stock for a year. Multi-year base. 10-year base. More? Wow, bigger. Okay, that thing's huge. Huge base. And after that, 1 year. And then you ride off from 23 all the way to 40. Consolidation. Continuation. Getting away from the 12-month average. Pulling back. Exploding away again. And then, all right, buyers are selling. Sellers are saying, okay, that's too much. We're selling into this. Buyers, no more buyers. Price action goes down. Churn. Stage 3, almost stage 4. Probably on the weekly, this is going to look like a small stage 4. Gets out of it. Overcoming that high. That previous high. And then after that, all right, we're too far away. We need some time. And since December 2017, January, down. And where was my alert, guys? It was around 60, 56, 57. Got triggered today. Some little price action right below it. Gets my attention. Come back to the chart. I say, hey, what's up? What's my implied measure move? Okay, if I have a breakdown, this is the greedy target. The further away target. If I had to have a monthly close, candle close below that 56 level, 57 level, my target's all the way down here to 31. Expect turbulence at the 43.5 level. Expect turbulence at the 36.50 level. So this, remember, this is a wall, previous resistance, now turn support. And after that here, this is all area of support. And this is a natural support right here. So for us to get all the way down to this target, this is how you could imagine. If ever you need a monthly candle close below the 12-month moving average, the monthly defined breakdown line, could have a close below. Hit the first support, bounce back up. Retest that breakdown line, and then after that, give another shot here and maybe go down straight away. All the time, 12-month average. So that's how the zigzag of you often see their Google stage analysis. You'll see that drawing their base, and then you'll see zigzag going up, and then the price action slowing down, going sideways over the 30-week moving average or the moving average. You could apply stage analysis to any time frame. Stan Weinstein did it primarily on the weekly using the 30-week moving average. And that's the pattern. That's the market, man, trying to shake you out. It's mean. You got to have a plan. You got to know that these things happen, that when you hit important support, the price action goes back up, tests previous support and resistance. And if that holds, then you going back down, etc. Down and down. That's why he had his sell stops above pullbacks, because he knew if the pullback resisted and started going back down towards previous low, that if ever the price action went back above that previous low, that the trend was over or going to slow down, was not a healthy continuation of that stage 4 decline. You had to get out, guys. Move on. So always, the trend is your friend. A lot of ways to identify it. For trend line, that's very severe. Markets are erratic. Stan also used the 3 points. Break on the 4th. That's a valid trend line break. The moving average tells you the trend. Lower lows. Lower lows. Or lower highs, downtrend. Higher highs, uptrend. Lots of ways to know where the trend is. But it's good to identify all those. And if one of those criteria is out, Trend line violation, exit. 30-week moving average or moving average trend violation, your exit. Higher highs with your sell stops right above those peaks. If you have a higher high, exit in a downtrend. All those mechanisms were based off observations from Stan or anybody now doing stage analysis, the behavior of a trend, a phase, a cycle. Woo! All right. So right now we're below the 12-month moving average, so you should never buy if you're below 12-month moving average. You should not necessarily short. You want the weight of evidence. You want to make sure you're below important support, close below, because remember these wicks, it's noise. It could easily come back in the last 2 days of the month, come back up, and then you're stuck. And then the price action, you don't know where it's going to go. It could hit that moving average and go back down, but it could go even higher and make a run at previous highs. But then after that, your sell stop, you're going to get triggered out. Unless you have a crazy position size that's super small and you're able to maintain a sell stop super high, there's not much use to that. Because now you're going back into stage 3. You don't have the power of the trend in your favor. No. Don't do that. All right. Weekly. Whoa, scribbles. Let's remove all the scribbles. Oh, man. Pat. Got to stop with scribbles. Remove. This one also. I want to keep those monthly defined resistance support lines, guys, because it's invisible on the weekly, right? Those monthly defined, but they're still active. And sometimes you'll get bounces off monthly defined. The price action might sink in through, but after that close above monthly defined support. And you say, well, why is the price action slowing down there? Well, it's a higher trends defined support that's blocking you or giving you a little turbulence on the way. All right, what are we doing? Stage analysis, stage 2, stage 3, stage 4, but we wouldn't get in. Still in the Ichimoku cloud, still above that monthly defined support, remember? So weight of evidence, it'll avoid you this crazy whipsaw. Price action actually went back up. You're not trapped. Stage 2, back down here, back in stage 3, rapidly not staying in it. Going straight into a stage 4, but remember, we're not below that 12-month moving the monthly defined support. So all that possibilities of hitting congestion area once you get close to it. So you are in a stage 4, guys. Tyson has been in a stage 4 right here. And you can see that volume. Look at those candles. This one right here. Let me zoom in. Whoa. Why won't that arrow stick? Move it here. See that volume here. Price action went back up. After that gap down, closed, sideways move, getting close to the 30-week moving average. So now Stan has this as continuation breakdowns. Or if you cross back above the 30-week moving average, then you're back into a stage 3. Not in the stage 4 yet, because remember, stage 2 yet. You have to go into stage 3. Then you reassess. Am I out of Ichimoku cloud defined resistance? Am I above monthly defined resistance? All the weight of evidence has to pile up before you go in. But it's reason enough if you close above the 3-week moving average, that should be out. So right now, this is the next level you want to look at if you're looking to see if that stage 4 is going to stop. And that's pretty much it, guys. Remember, this is how that's in your stage 4. Sell stop, price action going back down, go up, starting to go back down, close previous lows. Sell stop here, traders wait, investors here. Back up, price action goes back down. Sell stop could move just a little lower down. You see how the traders way, you barely moved it, but the investors, you moved it even closer. That's the price action getting closer and closer to the 30-week moving average. It's not expanding away anymore. Well, at this zone here, it wasn't that much. That was actually a good risk to reward entry right here. coming close to testing this previous breakdown here, support and resistance, close to 30-week average. The only thing here is you have to expect this monthly defined breakdown line, which is going to slow you down. So it's kind of dangerous to be here right now. The market's going to decide, it's going to churn. You need more time. It's going to go into stage 3. We don't know. But you're still in a stage 4 on the weekly. You're hitting monthly defined support. Still looks kind of good. I would want, if you're not in now, I would wait for that close below that monthly defined support. And then after that, pull back closer towards 30-week average. And then go all the way down. Woo! And then again, everything could change. It could go back up, and then I'd have to revise that. But right now, the trend is down. 30-week average is going down. We're very close to a monthly defined breakdown with that target all the way down here. The swing rule. Stan used the swing rule to measure some of his moves, expectations, to manage expectation of a stage. Usually, you should at least get that swing rule target eventually from that stage 4 or from that stage 2. And what else do we see? Weight of evidence, guys. Mansfield relative strength below 30-week average, declining 30-week average, underperforming the SPX, and it has been doing it since about right here when we started identifying the breakdown, price action going back down. You see how that Ichimoku cloud bring the price action back up? Always respect it, and then once you're out of it, then it's free for all. Even here, right here, this red candle here, that could have been an embryonic short right at that level, and then after that, you would have played this, book, 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 enter here again, book, and then maybe you're gonna get exited here. So if you're not in, if you didn't get in early, this is too late to get in now. You have to wait. Better, it'll be more rewards if you close below that, and less risk than if you wait here and then just end up in the stage 3, guys. All right, TSN. See ya soon. Ciao, guys.